All right, everybody. I want to say good evening to everybody. Today is March 29, 26. We're about to start our seventh video of our series Invest Your Way to Financial Freedom using our ultimate investment framework, which is a simple framework based on the fact that you want to, we help you find out a very concrete strategy where you can maximize your income and also while reducing your expenses, and that can help you generate a positive net income. And with a positive net income, what you want to do is try to invest in liquid assets, and also part of your positive net income you can combine with also debt so you can invest in illiquid asset. So this is our seventh video. If you haven't learned about it, you still not sure how to invest, please go back and watch our video series. This is our seventh video series, and we are deep in the topic of investment. As for the people who don't know me, I'm ElBozo from Compete Group. Our mission is simple. We want to simplify the business and investment world so you can get more educated to invest your way to financial freedom. We want to inspire the next generation of investors. So we want to, so we can create the, so definitely a community of new investors. So this is no hype, just realistic strategy. Make sure you like and subscribe if you haven't done so. Again, we are, you can always go to our, definitely go to our YouTube page, ElBozoBonsando, and TikTok. You can reach out to us if you ever need help. So yeah, so we're gonna go straight into it. um As usual, we want to start our series by talking about what happened last week in the market, and also what's gonna happen next week, what we expect, and we also share with you guys three stock that really well perform well in our portfolio. And lastly, we go deep into our topic today. It's fundamental analysis, guys. If you're into investment, you definitely need to understand the basic. So if you join us, please don't forget, this is our series Invest Your Way to Financial Freedom, where we discuss all about investing. So let's go straight into the topic today. For last week that just happened, we see, like, the main problem right now for investors say is still a lot of uncertainty in the market. So we're looking at the Iran and US Israel war. That war is definitely shaking up things for us. We are in the 6 week, no, we are in the 29th day of the war, over 4 weeks now, and still we're not sure when this is gonna end, because now we have new development that the UT from Yemen are entering the war. What does that mean? So now you have more, the war is becoming more global now. So there's a chance that more people get involved, and we're still gonna have to deal with that. So for us investors, what's gonna happen is, if the war continue like we mentioned, there's going to be more volatility, and we're already seeing it already, especially in the oil price. It's going up, and today when I just checked, the oil price is over 100. So it's 102 specifically. So that means what? We're going to have a lot of inflation. Price going to keep going up, guys. So it's gonna be very tough. I don't want to be the bad news. I don't want to be the person who give you guys the bad news. But guess what? Things gonna be tough. This is not the time to be, spending money, going crazy. This is the time to be defensive. You gotta know how to save. You gotta be investing smart. And if you haven't been investing, guys, don't forget. This is your series. Make sure you every Sunday 8 p.m. you are glued to the TV if you really want to get into investing. I'm not trying here to sell you something. I'm here just because we want to encourage people to start investing. And what differentiate you than other people who was making money, especially during the market right now, when everybody think market is crashing, people are investing, people are making money. What's the difference? Maybe because you don't have the information. So we are giving you the information, the tools you have every single week. We here at 8 p.m. just to share information with you guys. This is free information that you can take to change your life. So let's get into it. So what that mean? Now we have the war continue. Uh, it's definitely is gonna put everything gonna go up. So with inflation, we're gonna see like the Fed, the government is not gonna put a weight cut any weight anytime soon. So inflation gonna still stay sticky. So definitely looking out for those stocks. Where oil, we're buying oil, we're buying like a gold. So if you haven't been investing yet, guys, again, reach out to us. This is the time for you to just be smart about your investing. And to continue, what's gonna happen for next week? We have next week the Fed power. We're gonna talk, so we're gonna make sure when those people are talking, guys. When this Fed government are talking, we're gonna make sure we pay attention to them. We have also global inflation and labor data. So if you're into investing, guys, it's not just like you're just gonna go and buy stock and listen to those hype guy on the internet. You have to do the work. You got to pay attention to those news that coming out of the market. So definitely global inflation, you got to have to understand it. Also, we have CPI data that's coming next week. The consumer index price. What did it show? It show when goods prices are going up. So based on that, we're gonna make decision. And also we have job opening, job loss is coming to next week. So pay attention to those data that coming out next week. We have a weekly job burst claim too. We're gonna pay attention to that's coming on Thursday, and U.S. job report on Friday. So definitely a lot of good news coming up. Hopefully, good news coming up during the market this week. But we are paying attention. So keep being motivated. Again, reach out to us if you don't understand what's going on, and we're here to help. And now we're gonna part to our series. Part of our series is telling you as investors what are the stocks that working for us. Maybe this is something that you want to take in consideration if you're investing in the stock market. For example, our best stock right now is a stock called Aura Mineral. Its ticker is AUGO. So it's up 12% for us. It's a Canadian multinational that's manage a gold and copper. So definitely, even there's a war going on, guys. Guess what we're doing? We are buying gold. We are investing in those companies that we are making money on the gold. Gold are going up because people are freaking out. So they're not investing in equity that much. They are buying gold so they can save their money. And also other stock, the two other stock that did well for us this week. Again, gas. For example, Exxon Mobil, which is the ticker is XOM. This is up 10% for us. And also Chevron. We're investing in the gas. Chevron is another company. It's been good to us. So make sure you guys are investing in those companies that's going up right now. Again, oil and gas. You got defensive stock. We talked about this a couple weeks ago. When there's a crisis, oil price guys going up, you buy into the gas because the gas price gonna go up. Those industries, oil and gas, will make money. So we are here to make money. No matter what you think about the war that's going on, guys. This is not our goal as investor is not to get into the politics. Obviously we have our political, as human, we have differences and we're going to have our opinion. But as investors, we have to focus on where the money is flowing, so just stay focused. Make sure you doing your research about those companies and invest in those companies. And for the people who just joined, the live, again, this is our series, Invest Your Way to Financial Freedom, where we are discussing everything investing. This is our seventh video, guys. I couldn't imagine how long it's been. This is our seventh video. So we are going to continue and share those information with the people. And I just want to shout out everybody who's in the chat. RND, I see some people from Mexico. Shout out Mexico, Mexico people. I'm sure they're in the live. And again, thank you for being here. And the people who just joined us, again, stick with us. Those are information that you might need to invest your way to financial freedom. So then what we want to look at this week, we want to just talking about the introduction of fundamental analysis. Because why? Most people lose money in the stock market, not because they are unlucky. but because they don't understand what they are buying to. So how many times we want to invest and people are like talking about investing, but if you don't know what you're investing in, it's like you just like wasting money. Because what I'm realizing right now, because we are in a short a focus a type of mentality in the community, because now everybody want me to just like, oh, give me the formula. No, nobody have the formula. So you have to put, this is not a secret formula that we have. You have to put work, before you invest in those companies. You have to do your research. You have to analyze those, do your analysis. So today I'm going to show you exactly how professional investors analyze company before putting money in it. And we are not using theory. We are using one of the most powerful. We are not just like use one of the most powerful company in the world as an example, which is Nvidia. Where we can just like kind of discuss certain thing. If you're looking at Nvidia, a certain thing you want to look into, when you investing in those company. For example, Nvidia is one of the most valuable company in the world with a estimation of 4.4 trillion market cap. So that's a big company. And you got, after that, you have Apple or Google. So those companies are very huge company. They're making a lot of money. So if you want to invest in company like this that going, you want to make sure you understand what are the fundamental of their business. And that's what we're going to discuss today. So thank you for everybody who stay with it in the live. And again, we are here to share with you guys what you need to understand before you invest in those companies. So let's go straight into it. Let's think about what is fundamental analysis. So fundamental analysis, it's you are analyzing the business, not the stock price. Before you go in and invest, you're not just like, oh, the stock is this, for example, $100 is going up, I'm just buying. That's not fundamental analysis, because you need to understand what you're buying into. You are buying into ownership. So you are an investor when you're investing in those companies. So you need to understand the revenue, the profit, the growth, competitive advantage. So again, you have to do your work, guys. Nobody is going one day and become the best investors. For example, Warren Buffett is considered one of the best investors in the world. He spent a lot of time doing his a simple fundamental analysis of the company before he invests in them. In a simple term, for example, if you're buying a restaurant, you don't look at just the menu design. Can you imagine you just buying a restaurant and then you just go and you just look at the menu they have? So no, that doesn't work like that. So first, you want to look at how much money they're making, the expenses that they have, the growth, and that's fundamental analysis. So definitely, again, we need the knowledge. You need those information to be able to invest in this company. Don't go and just buy stock like crazy. So then I just want to go to the basic now. Now we just talk about what fundamental analysis is. And I want to also talk about another way to invest, which is technical analysis. So those two things are different. For example, I want to compare that. When we come as investors, we can be, some people want to be fundamentalists, which is where they do all the analysis, like we mentioned. And also there is another component of investing, which is technical analysis, where those guys, they're not like, they only like looking at the charts, they try to make sure in and out of stock. So fundamental analysis focus on business. A technical analysis focus on charts. Fundamental analysis, for example, we're looking at long-term investing. But technical analysis, those guys, they're doing short-term trading, i.e., like day trading. Those guys are not looking at revenue profit, but they're looking at pattern indicators. So those are like in and out the stock. They're not staying in like, for months, for years. No, those guys just go in and out. So that's technical analysis. So fundamental analysis, what it show you is that what to buy, because you know exactly what you're buying. But technical analysis, which is like telling you when to buy, because your goal is to know when it's going up, you sell. When it's going down, the price is going down, you buy. So those are two different things. Because me personally, when I first started, I started as a fundamental analysis guy. I took my time. I think I when I went to business school for my MBA, that's one of the classes that I really like, corporate finance. If you ever take, that's what drew me into business. Actually, I never thought I was gonna be into business, but when I was sitting down and understand, breaking down what is it that the companies are and what are you buying in those companies, I fell in love with fundamental analysis. That's how I started analyzing those business so I can better invest. But as I go and understand those business, then I move to be also a technical analysis where I'm doing day trading every day. But for a beginner investor, I would suggest you guys to start a fundamental analysis, because on the internet, I'll be honest, on the internet, there's all those day trading guys. They're telling you, oh, you can learn day trading and then you can be a millionaire and you're gonna be in Dubai. I'm not saying it cannot happen, but I want to make sure here in this series, we teach you the fundamental. We teach you what you really need to understand before you go to those things. So it's a process. And unfortunately, right now, well, as we see on social media, people want the fast thing. You guys, people don't want to put the work. People don't want to do the work to understand the basics. So that's why if you come in this series, expect me to teach you what it is when it comes to the basic things that you need to understand. In summary, fundamental analysis answer, is this company a good company? So you know if it's good and bad. Technical analysis is only focused on, is it the right time to buy? So if you see those guys who are doing the day trading, looking at charts, this is the guys, they're just in and out. So you just want to know when and when to come and when to leave. So again, first I would like, any beginner investor to start investing as a fundamentalist, understand what you're investing, and then you move on to be a technician when you're doing technical analysis. Please don't start day trading unless you understand the fundamental of business. So now, as a practical example, we want to look at, for example, NVIDIA. Just like, because those are like very difficult concept to understand. If you just talk about the concept and not giving examples, it's very difficult. So if you look at, for example, NVIDIA right now, anytime you can Google NVIDIA Corporation and you will look at, you will have a basic idea about their finances. For example, they have a market cap, like I said, $4.5 trillion. This is like a big company, guys. They're making a lot of money. And also, they have a lot of different ratios. They could talk about PE, ESP ratios. Those things we're going to go through it tonight, because you need to understand what are those numbers are, what they mean. So when you are looking at company to invest, you know exactly what are you going to look for to invest in this company, because not everybody who's making money, just saying they're making money, is also good to invest in. And that's why we want to go into today. For example, one of important indicator that we look to, it's called earning per share. And if you look at any company out there, you look at the sheet, the balance sheet, and their financial statements, you want to look for what they call the earning per share. What it is, it's how much profit a company make for each share you own on it. So if you are an investor in a company, EPS is exactly how much a company makes for each share you own. In simple term, this is, you can use it by dividing the profit of the company divided by the number of shares. For example, to make it more practical, for example, if you look at NVIDIA right now, the earning per share, it's 1.6. So for the recent quarter. So what I mean, if you want one share of NVIDIA, the company generated about $1.6 in profit for you. So the company is working for you, making money. So that's why the EPS is very important to look at. That's exactly why the EPS is a very important indicator that we use a lot of time. For example, so then why you say the EPS matters? It show you for profitability. It help you compare company, because you can use this EPS to compare what company is good or not. For example, a growing EPS, this is a strong business. So when you look at the EPS, for example, Walmart compared to um, Nvidia, you can see which one have better EPS. And definitely, if you have a bigger EPS, that means you have a strong business performance. And investors love company with consistent EPS growth. It's not just one report. You look at one report and you're like, oh, this is a good EPS. You got to look at what they've been doing. If the EPS is going up, so that means the trend is going up, the business is growing. Now, another indicator that we also use when it comes to financial analysis, we use what we call the price to earning. What is it? They call it also PE ratio. You know, a lot of time if you're looking at those a Bloomberg or those journal, so you're gonna hear about what we call the PE ratio, the price to earning. What is the PE ratio? Show you. It show you almost how much investors are paying for $1 of profit. In simple term, is the stock price divided by the EPS. For example, Nvidia, if we simplify it, the stock price is about $100, for example. The EPS is 1.6, quarterly and annualized higher. The PE is high compared to most company because why? Because those companies are having very good, they are paying for $1 of profit. They are paying a lot for that amount of profit. So what the PE tell us is a high PE investor expect future growth. But if the PE continue to go down, so then you know the company might be undervalued or slow growing. So it could be two things, you know. The PE might be indicating like, you know what, the company is might be undervalued. You know, they are not, you know, investors are not pricing it very well. Or also you can just say definitely the company itself is not making money. It's slowing down. So you got to be paying attention. You got to understand those concepts, guys. You got to understand those concepts. So now, if you look at the concept of EPS versus PE, and simpler way to explain it, EPS it's show performance, how much money the company makes, but the PE is what we use for valuation. It tell you how expensive is the stock. With both matters together, we need both to invest. We want high PE, high EPS, which is good investment. High PE plus low growth is a risk. It could be overvalued. So low PE and strong EPS growth have a higher potential opportunities. For example, Nvidia, in the case of Nvidia, you have EPS is growing fast. Definitely, that's a strong profitability. You have the PE is high. So that means market is betting big on AI growth. So as a AI company, you can see every quarter the report is when you look at the EPS and PE, that's mean like the company is growing very fast. You are paying a premium today because investors believe an Nvidia will dominate in the future. But that doesn't mean it's gonna stay like that because guess what? There's a lot of things that can happen. But those indicators give you guidance how to invest. So you want to make sure before you invest, you understand those indicators. So in summary, the EPS tell you how much money the company make. The PE tell you how much you are paying for it. So this is a very important thing to really understand, guys. So now, since we talk about PE, EPS, those are basic indicators that investors we looking at. So definitely now we want to go to kind of give you a step by step how you can start understanding, do your fundamental analysis for the company you want to invest with. So there's like we have so many steps that we want to go through so you can understand. We're gonna break it down for you. For example, the first step I will say is look at the revenue. Also, we can talk about what they call, you might think, if you're watching the news, the business news, they might talk about the top line. What is the top line? Is the revenue. The total amount of money bought in the company operation measured over a set amount of time. A business revenue is gross income before subtracting any expenses. So this is definitely what we call the top line, because this is purely revenue, guys. It's mostly like sell. It's indicating it's a company ability to generate income. While the bottom line, for example, it's involved the net profit. You have to do with expenses that deducted it. So we want to make sure, if you're listening to those people on the business news, they might talk about top line and bottom line. We just want to clarify that for you guys. The top lines have to do with sell revenue, but the bottom line, it's all about net profit. That's include expenses. So we just want to make sure we clarify that, because when we're discussing those terms, we don't want people to be like, what are you talking about? What is the top line? What is the bottom line? But no, as you're doing your fundamental analysis before you invest, you want to make sure you look at first the top line, which is the revenue. The revenue equal total money that the company make, guys. So that's very good. If the company is making money, good revenue, that's a first start. But that's not all, guys. So now, after you look at the making money, for example, Nvidia. Let's give you a quick example, because it's very hard. I know it's very hard to throw those terms, those concepts, explain them, not giving examples. So I'm trying my best to make it so you guys can understand with some realistic example. For example, Nvidia, quarterly revenue, it's $68.1 billion. You got growth is going 75% year to year. So if you look at Nvidia, you're like, oh my God, the revenue is so big. So this is massive growth. Anything above 10% is strong. But now you got revenue for Nvidia, it's like 73%. So what you want, but the good thing is, like, if you are very careful, you want to see consistent revenue growth. So not just one time spark and revenue and then you're like, oh, I'm investing in this. No, you want to make sure it's over time. You look at the revenue from multiple a report. So then after you look at the revenue, when you're doing your fundamental analysis of the company, the second thing you want to pay attention to is the profit. What is the profit? It's the net income. It's the actual profit of the business retained after subtracting the expenses, including operation costs, insurance, taxes from total revenue. So it's indicate the overall profitability and financial health of the company, representing fund available to reinvest, paying debt, or distributing to shareholders. So definitely, if you look at the company, you also, beside the profit, you also, I would say more importantly, the net profit is more important. Because why? Because that's what the money that left after all these expenses. So revenue mean nothing if the company is not profitable, so a lot of time you see all those revenue they're making. I know people who go into business that are making probably, I would say, $500,000 a year in revenue, but their margin profit is 2-3%. you know so they are not making a lot of money in term at the end, because all the costs and expenses they have eating that business. So a lot of time you see on TV, I see a lot on TV, for example, how people making it, and then they're talking about, oh, I build a company that I'm making $300 million. But guess what? The expenses, the net income, they end up with $50,000 a year. So what's is good is making a company for $3 million, but at the end, your net income, you end up with $30,000 or $40,000 a year. That doesn't make sense to me. So I would rather just stick with a company that don't have a lot of revenue, but I'm still making a 70% of my revenue at the end. So the net income, it tell us they are not just growing. They, for example, in the case of Nvidia, they have a net income for $42 billion. So they're making 48,000, and then 68 billion, and then they have a net income of 42. So they have a lot of cash, massive cash sitting there to invest. So those are the companies that when you look at them, you're like, wow, it's worth investing, it's worth taking the risk. But again, you still got to do your your research. So definitely after revenue, make sure you look at the net income of the company. For me, it's one of the most important things I look at is the net income. I don't really care too much about how much money you're making. I care about how much money you got in your pocket so we can share it. That makes sense, right? If that makes sense to you in the live, make sure you you definitely drop a comment so you know I know that you're following. So now the third one is the third step I would say when doing your financial analysis, a fundamental analysis, it's the profit margin. Exactly, that's what I'm talking about. That's had to do with the net income. It's a measure of how much money the company is making on its product and service after subtracting all direct and indirect costs. It expresses in percentage. So the margin show efficient how efficient the company is. For example, Nvidia, they have a gross margin of 75%. So it's if you want to explain it in common term, 75% gross margin mean for every $100 Nvidia make, they keep 75% before expenses. So in hindsight, high margin, what it means is strong pricing power. It's indicate competitive advantage. So the bigger the margin is telling you they have the advantage. They are going. Not everybody's competing with them. So that's why, as an investor or beginner investor, you want to understand what is the growth profit margin. And another step we already talked about is the EPS. We already talked about it when we're doing our analysis. I just want to make sure before I explain the EPS, which is earning per share, I probably just go to it again quickly. Remind you, the earning per share represent a company net profit allocated to each outstanding share of common stock, serving a key indicator of profitability. So we want to make sure we have a good earning per share on any company we are investing in. So definitely is help investors evaluate company value. So you want to make sure this one of the most important metric that investors really look into. So definitely a rising EPS, it's a strong company. So definitely we want to look at that as an indicator. Uh, another the fifth step that we want to look at when we're doing a business analysis, the fundamental analysis, we want to make sure we look at each segment of the business. Definitely every unit of the business, what they're doing, what product they're getting. So it's good that a company is diversified, have different segment, they having their own product and they're making their own money. And if you look at, for example, Apple, for example, they have different product and different segment in their company making different money. You want to see that, guys. Look at their segment and what each segment are making. For example, for Nvidia, they have data centers. The data centers are the biggest part of their business. They're bringing $62 billion in their company. So definitely, it's part of Nvidia. Mostly that's where they generate their money. And also they have a segment for gambling. It's a small portion, definitely, but they innovating, they are growing. Infrastructure, they have also AI infrastructure going on. So definitely, they investing heavily in infrastructure. So every segment of Nvidia is making money, guys. So that's why you want to see. Nvidia is not just a gaming company anymore. That's when I think that's where they started, but it's mostly like an AI infrastructure company. So they definitely they have a very big advantage in the AI competition. They have that competitive edge. So nobody can come close to Nvidia. But there's still other company right now that getting into it, but definitely having a competitive advantage make Nvidia a great company to be investing in. And the sixth step that we want to look into is the growth driver. So ask yourself, why is the company is growing? What is making it growing? For example, in Nvidia, one of the things that make it exponentially grow was the AI boom. AI, they coming with Chat GPT. When I think when Chat GPT come from a They were the one that the system was the one that boosts it. So that's why they Nvidia become like, a big company. They also have cloud computing demand. There's another part of the business that's going also. They're also doing big tech spending. Big tech is spending billions of dollars in their infrastructure, getting their products. So Nvidia become, definitely dominant player in that sector. So when you're investing in Nvidia, you're not just investing in Nvidia, you're investing in the AI future. So, I know right now, people are talking about the AI boom, maybe already not, still shaky, might be, not the future that we think is gonna be, but I can tell you, AI is the ultimate transformation of our society. We're seeing it every day now. You know, now you go to grocery store, you see everything processing by AI. You go to the doctor, AI is becoming part of us. So definitely, you are investing in the future when you're investing in a company like Nvidia. And the seventh step that when you're analyzing, doing your fundamental analysis is definitely risk. As an investor, you have to always talk about what the risk. Risk is part of investing. Like I said, if you don't be don't be panicking because of, oh, there is risk, but I can tell you there is risk everywhere. Every investment, there is a risk that you lose your money, but does that mean that you're not going to invest? No, you got to price the risk into it. For example, Nvidia, they have risk. When you're doing analysis for Nvidia, you will see, like, they have a concentration of customers. There's a few large, a big of chunk of his revenue is certain tech companies that they do business with, and that can be worrisome. What about something going on with the tech sector? So it's gonna affect your investment in Nvidia. So definitely you want to look into that. And also one of the risks is competition. You have other companies like AMD's customer chips that coming in the space, getting market share from Nvidia. So those are competition is also a risk to take in consideration. A regulation is part of the risk, for Nvidia. For example, a lot of companies now, a lot of countries are taking regulation from AI and all the stuff. That's also going to affect you. And one particular problem with Nvidia is problem with China. China is the second biggest economy in the world. They would like to send chip to China and make more business, but guess what? The US doesn't allow them due to competition. So that become a risk. They cannot sell to China legally. So if they selling the AI chip is the lowest version, so even China now don't even want those lower version. China think like, why I'm buying the lower second grade a chip from you. So as an investor, you have the pricing China problem with Nvidia. So definitely, that's an example of how you invest in a company. You don't have to. It doesn't need to be perfect. All you need is just understanding what are the risks, and are you able to tolerate the risk that you're taking. So that shouldn't prevent you to take the risk. If taking risk, calculated risk with a system where you can protect yourself, but you're still gonna lose sometime. And people want to win all the time. If you're an investor, you know that in the investing game, sometimes things gonna go well, you're gonna make money, and sometimes too you're gonna lose money, because that's part of doing business, that's part of investing. If there's an investor out there who tell you they invest and they never lose, tell them they're lying. They're selling you something, they're just selling you something. Every investor that I know of, they do lose money, and a lot of time they lose a lot of money. Me myself, when I start investing, guys, I felt so many business. I waste so much money in some business that don't even take off. But because I wanted to start, I didn't understand at that point what was the risk, how to invest. But now, guess what? I understand it. That's why I'm doing this series, guys, to make sure you guys, if you're investing, you understand exactly what you're doing, so you don't make the mistake I make. So that's why we encourage people, when you come to our series, stick with it. Make sure you take your time, guys, and learn the basic thing we are providing you, that you can take your investment journey to the next level. In summary, I can tell you, before buying any stock, ask yourself those questions. Is revenue going fast? Is the company profitable? Are margins strong? Is the EPS increasing? Where is the growth coming from? And what are the risks? So, in summary, guys, those questions you need to make sure you understand them and you answer them as you're going through your doing your analysis to invest in those companies. So, don't just invest in hype, don't invest in trend, not because somebody, your cousin is investing, you want to invest too. That's not it. Invest in business you understand. That's one thing like Warren Buffett always tell people. If you cannot explain your business model in a napkin, it's not feasible. So for him, he's not investing in it because he want to have things simple. He want to understand things in simple term, and that's why a lot of time keep people out from investing because guess what? They think it's so complicated. The rich people, guys, I always say they're not that smart. They just smart everybody out. They create a system that's so complicated, and regular people they like, oh, you know what? I'm not gonna understand it because it's too complicated, and that's why they get you. And that's what we're doing here in this series. We're simplifying things for you guys so you can understand it. And if you haven't really learned the basic, guys, we have so far today, this is the seventh video we have today live. So you want to make sure you go back to our YouTube channel ElBozoBonsando, you can go back to those previous videos that where we break down all the steps, all the little nitty-gritty to invest. So make sure you following this series, guys. It's every Sunday, 8 p.m. We are moving on now. Things gonna get harder because we're gonna talk about tougher subject. But guess what? They tough, but we need to understand them. In order to take your investing journey to the next level, you need to understand those concepts. And that's why we encourage you guys. Take your time. Don't listen to the hype, you know. And if you master this, the knowledge that we're providing you, you're not gambling anymore. You're building wealth because real wealth is about education, learning what you're investing in. Based on the analysis we just did, would you invest in Nvidia? Definitely. Would you prefer to just like invest in chart and learning, or you prefer to understand what you are learning? If you're on the live, make sure you drop a comment so we can know that you're following with us. So remember, your financial future won't change because you're lucky. It will change because of the decision you make with your money today. If you start investing today, your future self will thank you. And that's why we encourage you guys to subscribe, like our video, share with your friends. If you haven't started yet investing, or if you're investing, you're having trouble, please reach out to us. We are live every Friday, every Sunday, Central Times, 8 p.m., and we can help you guys. So make sure you keep yourself motivated. This we are living in a very tough time, guys. If you think just going to work and you went to school, going to work and get a paycheck, you're gonna be good, you're gonna be well off, and you're gonna retire. That's not it, guys. Things are changing. The world will get coming harder. So please do yourself a favor. Learn the fundamental of business. Learn fundamental analysis so you can really take your investment to the next journey. For next week, we're gonna talk about how to interpret financial report. We're gonna a little bit deeper about business a financial report, how to understand, interpret them. What is the secret behind them? It's not just gambling. Now we're interpreting things before we invest. So this is what successful investors do, guys. They take their time and learn the business. So I hope I'll see you next week. Definitely, we will be here next week, Central Time, Sunday, April 5th at 8 p.m. So I'll see you. Take care, and I will see you next same time, same place. Have a good weekend. Have a good week.